Good morning, URL agent partners. Thank you so much for joining us. We are excited to do this ancillary webinar for you today. I like to think it's a special treat because you have all the leadership team members here to talk about their product line. So you're getting the specialists of each of them, we like to think anyway. So I'm Christy Wilbert, Senior Vice President of Medicare Offerings. You also have Thomas Purcell. He's the Vice President of Health Options. And then Steve Clemens, co-owner and principal now, and he runs the Life and Annuity department. So thank you again for joining us. I just want to walk you around the screen really quickly. The webinar is going to be recorded today, so if you have to jump out for a meeting or we run long, don't worry about it. You can go back and watch it on our website. Go ahead and click the blue chat button on the bottom right of your screen. That will open up the ability to chat either with us or you can use the Q&A, and we will be happy to answer questions at the end of the webinar. There are quite a bit amount of handouts there for you as well that we created that you can use with your clients, and then also some cheat sheets for you with facts of the different ancillary products, so that might come in handy for you later. I do want to mention some future events that we have going on. Life and Annuity is putting on a Diversifying Your Business seminar. So it will be here at the URL office. That's on the 22nd of January if you haven't registered for that. They also have an upcoming Life and Annuity Symposium that's here in Harrisburg, and that is March 26th. And you can go ahead and register for that on our website. We are doing a big ancillary push, just like everybody else is this time of year. So after this specific webinar, we will have Physicians Mutual has a great speaker, Mike Story. He'll be joining us later on in February to do an ancillary topic webinar. So I hope that you register for that as well, just to get a different perspective on the carrier side of things. You probably are wondering, why do you have us here at URL doing an ancillary product webinar when we do bring on the carriers? You know, we have had Aflac in the past, or Allstate or Physicians Mutual come in and do their product webinars for us. We really think that as an agent, it can be easy to get overwhelmed with all the different options that you have. So we've taken the responsibility on ourselves to really dive into the benefits for you and kind of cherry pick which plans have the best coverage for the client dollar. So on the Medicare team specifically, we've gone out and redesigned that portion of our website. So we actually have a tab now that says products that we recommend. So for dental, we want you to sell this carrier. For hospital indemnity, we want you to sell this carrier. So I definitely would recommend going out and taking a look at that to really make it easy for you. Also on our Connecture platform or Medicare Now, there is the ability to quote, compare, and enroll in ancillary products. So you can go out there and use that at your disposal. We've also heard some hesitation towards selling ancillary products, and that might be because you're not sure how claims work. So we are going to be discussing that today. As I said, ancillary products is a big topic, mainly because all of the prescription drug plans have been going non-commissionable. So agents and agencies have lost big revenue portions to their business, and this is a great way to make it up. The commissions are really good on ancillary products all across the board for Medicare, for life, for health. So it's an easy way to make up that lost revenue. Some of you might also be feeling that you're upselling when you're discussing a different product during an appointment, or you're being too pushy because you've already sold the health portion of it, and you feel like it's been a long enough appointment. You don't want to make it shaky. But I would like to argue the fact that clients don't know that these products are available, and you as the agent have a responsibility to let them know what's available to them. If you're not doing that, you're doing a disservice to your client. it is their responsibility to decline. So just make sure that you're being that responsible agent, that they can depend on you for sharing all of the options to them. And we're going to provide you with some talking points today. So hopefully you feel more comfortable opening up that conversation after the webinar today. If you don't, I just want to give us a quick plug to our Power Sales University that we have available to all of you, discounted to our Gemini agents. We took it internally here. It's a 24-month program. I know that sounds like a lot, but there are some golden nuggets in there. And, each day might be, sometimes it's a 6-minute video, sometimes it's a half-hour video, but it's really worth your time and dedication. You'll get some great sales tips in there. And most insurance agents, we've never had sales training. So, give yourself that special treatment and that extra education. All right, I am going to get started here. I know that was a long intro. All right, so what is an ancillary product? We use that word all the time, but it is something to supplement your primary insurance. So it is not your major medical. It is something to enhance that out-of-pocket risk and take over that financial exposure that you're going to have. Like I said earlier, it is growing tremendously. So in 2025, there was 515 million in ancillary products. It's projected to grow to 1.25 billion by 2035. So really big numbers there. And you want to make sure you're taking advantage of that opportunity. Why should you sell ancillary products? I mean, we talked about it to increase sales and revenue, of course, right? High customer willingness. 91% of insurance customers would consider buying all policies from one provider or agent if the offers are right. People can't keep track. Who's my car insurance agent? Who's my life insurance agent? Who's my Medicare agent? They really want it all to be bundled into one person or agency if they can. That's why agencies are very successful, that are the one-stop shop and have everything built into one. So if you are a single independent agent, I would offer as much of those things as you possibly can. I'm going to skip to the bottom one with cost effectiveness. We've talked about that before. If you get everything you can out of one client, not only does that provide retention for you because they're not going to go anywhere else, but you have to sell less policies and have less people that you need to service, because you have a choice. You can go out and get 250 clients on one product, or you can sell, 20 people, 5 products, and it's the same amount of revenue, right? And then it's an untapped market. So 61% of policyholders have only one policy with their agent. So again, opportunity. So how do the claims work? It is separate than health insurance. They're not going to be talking to the hospital and paying a hospital bill. So ancillary benefits often require you or the policyholder to submit a claim form. So you can either call into customer service, you can fax something in, you can go online and have a member portal and submit a claim. Then somebody is going to review it, because just like any other insurance policy, there's going to be coverage limits, there's going to be exclusions, and that documentation is going to be required. Then once the claims adjuster reviews it for coverage, the check will be sent to the consumer. So like I said, this is something that pays the person that bought the policy. So it is money back into your pocket. This is just, again, a claims flow chart. It's so small, I need to make it bigger. Okay, so the covered event happens. Maybe if it's an accident policy, you have a slip and fall. Then a claim is filed. So the claimant has to go online or submit a paper claim submission. Then it's reviewed by the carrier for the coverage limits, and then it's paid to you, the client. So what are most commonly sold products? Say you're brand new, you're going to do ancillary for the first time. Where should you focus? These are my recommendations. Dental, vision, and hearing is the number one sold ancillary product, just because MedSup is about 50% of the market and it does not include dental, vision, and hearing. Same thing with Pennie. You're just getting your major medical. You're not getting all these ancillary lines of business, right? Hospital Indemnity. That's the plan that's going to pay for your coinsurance or co-payments if you're ever in the hospital. Critical illness or cancer policies. And we're going to go into detail about what all these things are a little later. Life insurance and accident insurance. If you're just starting out, these are our recommendations of the top 5 that you should be reviewing. Okay, so just a quick overview on dental. So you pay a premium for a max of coverage. What max of coverage means is the policy might say the limit is $1,500 in a year or $3,000. So obviously the higher the premium, the more coverage that you're going to get in the dental plan. You select a dentist from the plan's network. So if you already have a dentist that you love and you want to stay with, you want to make sure that that dentist is in network. If you don't really care and you're happy to move dentists, then I say select the plan and find the dentist later. You usually have an annual deductible. Preventative services are covered at 100% typically. In some dental plans, you could have a waiting period. So just be aware of that. So basic procedures usually have a co-insurance. It might be 60%, it might be 80%, depends again on the premium. But basic procedures are fillings and extractions. And then you have major procedures that usually have a higher co-insurance, like crowns, bridges, and dentures. Now you can get a simple dental policy that doesn't even include major procedures for less money. So like I said, they're all over the board. There's many options that you can pick from. But a very robust dental plan will cover all of these things at a good high coinsurance. Some dental talking points when you're with a client. So preventative care saves you money later, right? Just like having medical insurance. If you have it, you're going to go and maintain your health. So with a dental plan, you're going to get your teeth cleaned every 6 months, and you probably won't have many issues compared to somebody who doesn't go to the dentist for several years. And then when they finally go, they have all these cavities and procedures they're going to need to have done in their mouth. So it reduces costs for procedures, obviously, because there's that co-insurance. I'm sure you've heard oral health is linked to overall health. It has a lot to do with our heart and our cardiovascular system. So it's something you definitely want to maintain. It has low monthly premiums compared to potential costs of major dental work. I don't know if you've ever seen what your dentist sends over for your health insurance to pay on a crown or a cavity, but it's in the thousands of dollars. So having that dental coverage definitely is worth it in those situations. Plans cover spouse and children. You can include other people on your dental plan. It's not a simple independent plan, which is nice and saves you money as a family. Hospital indemnity. So this provides cash benefits for hospital stays. It can cover your out-of-pocket costs. So any deductible you'd have on your medical plan, any co-pays, and even for non-medical expenses. So remember, this isn't your primary health insurance. It is paid to you, not the hospital, and you can use the money for anything. Just because it's supposed to go to your deductible co-pays or whatever, it's paying you a lump sum check that goes into your bank. So you can use that for whatever expenses you've had during that time. Who's the target demographic? So people with high deductible plans, because they are paying out of pocket, those high deductibles. Medicare Advantage enrollees, because when you are hospitalized, you either have the per stay or the per day co-payment. Families with children, and then small business owner and self-employed individuals. And the reason they say that is because small business owners and self-employed individuals typically don't have an employer contributing to their monthly costs of their insurance. So they're typically on high deductible plans, so big out-of-pocket costs. This is just a good example of a hospital indemnity plan and how it works. So if you're hospitalized for 3 days, your health plan might leave you with a $2,000, copayment or coinsurance. So the hospital indemnity plan pays you $300 a day because that's the benefit that you chose, putting $900 back into your pocket. So $300 times 3 days, $900. So health insurance covers the medical costs, but not all the expenses. The hospital indemnity plan gives you cash to handle what insurance doesn't. So for a simple $15 a month, you could receive that $300 a day in benefits. Obviously, the higher the premium monthly, the more money that you can get back in your pocket. And just to be clear, it doesn't matter if the per day amount is more or less than what your Medicare Advantage or your Pennie plan is covering you. So say your per day payment is actually like $250 and you don't have the full risk of the $300 per day, it doesn't matter. They're still going to pay you the $300 per day because that's what your monthly premium is paying for. So in some cases, you can actually earn more than what your bill was. Here's some script ideas that you can use when you're in the middle of an appointment. So there are 3 main options for coverage. My clients typically choose option 1, is the plan by itself with full co-payments for X amount per month. Let's say you're selling a $0 PPO Medicare Advantage plan. So you're saying you can have just the plan by itself for $0 a month. Or option 2 is you can have that $0 plan, but add in that hospital indemnity benefit I mentioned that will actually send you a check to pay $250 per day, or in our example, we use $300. And a lot of my clients like this as they can focus on recovery and not repayment after a hospital stay. And this would be around $15 a month. So they're paying $15 a month with the $0 PPO plan to have that extra out-of-pocket protection. Or option 3 is have all of option 2 plus add in a cancer benefit. So also you'll get that protection of if you have a cancer diagnosis, you'll have the lump sum benefit of $25,000 should you be diagnosed, which is out of your control. And the cost maybe of that is $20 a month. So 20 plus the 15 is $35 a month, and you're covered with your major medical plus these 2 ancillary products just for peace of mind and extra protection against out-of-pocket costs. So what interests you more? And let them make the option or the choice. So how does a cancer policy work? It is a lump sum benefit typically. So it pays you one-time benefit upon diagnosis. So it covers cancer only. Again, it's paid to you, the client. Funds can be used for anything. There is a waiting period typically of 30 days from when you buy the policy. And exclusions do apply like pre-existing conditions, of course. So it's not something that somebody that's already been diagnosed can purchase. So who's the target demographic for that? Anybody in the age from 30 to 65, working adults concerned about income protection. Some high risk groups would include obviously people that have history of cancer in their family, individuals with high deductible health plans, Medicare Advantage enrollees, because cancer and chemotherapy go towards your max out-of-pocket costs or your MOOP. Typically on plans, they can go anywhere from $4,500 or $7,500. So if you had a lump sum pay to you, it would fill that gap for you, which is really nice. Those seeking financial security from non-medical costs. And the ideal buyers of cancer policies are really middle income earners, right? Because they're the ones that can't afford those huge costs, but they can afford the monthly premium on a plan like that to have peace of mind. So some cancer talking points, affordable premiums, it's little monthly costs for huge protection later. And unfortunately, cancer is it's high. It's a common thing at this time. 1 in 2 men, that's crazy. So 50%. And then 1 in 3 women will develop cancer in their lifetime. And that's right on the American Cancer Society website. There's no network restrictions, so it doesn't matter where you're going. Remember, the benefit is paid to the consumer, so it's not tied to any providers. And it's a perfect segue during a Pennie or ACA or Medicare Advantage MOOP discussion. So while you're having an appointment, it is required for you to be talking about the max out-of-pocket protection. So typically, agents are naturally bringing up cancer as an example of how you could hit your MOOP. So while you're having that discussion, you could say, here's a way to protect against ever hitting your MOOP, because cancer is one of the big exposures to ever have a catastrophic event where a person would hit their max out-of-pocket cost in a year. I'm going to let you go over this example, Thomas, that you put together for us.
Thanks, Christy, and hello, everyone. Yeah, so that's a great segue into how we can actually apply this in the case study. So I used Melody. Christy had talked about how self-employed individuals are a good target audience for some of these products. Case in point right here. So Mel's single, self-employed, no dependents. And then in this example, I'm using a health access plan through Allstate. So not to be confused with an indemnity plan that would complement your client's primary source of coverage. This replaces it. So Mel, she's not eligible for ACA subsidies. She's self-employed, so she doesn't have coverage offered through her employer. Not being eligible for subsidies at her age, where she's residing, premium increases were astronomical. She was unable to afford that. So she pivoted with the help of her agent. She went with a health access plan through Allstate and purchased a $25,000 cancer and heart and stroke plan. So Mel, unfortunately, goes in for a routine mammogram covered under preventative care services at her age, finds out she has a breast cancer diagnosis. So unfortunate event. Luckily, she had the peace of mind and protection with these plans. So $82,000 roughly was the total treatment cost. Just with the cancer and heart and stroke benefit, she's getting $25,000 in her pocket. Like Christy had mentioned, these cancer indemnity plans, they'll pay directly to you, and you can use that money as you see fit. So $82,000 in total treatment cost after all the coverage and benefits kicked in on top of the $25,000 cancer benefit that she had purchased. Her total out-of-pocket cost for a rather life-changing event and diagnosis is just a little over $3,000. So Allstate off. Hopefully you take a chance to look at the handout section. On there is a link to our URL website. We have webinar archives in there from previously held webinars. Allstate, Aflac, those were two really great ones. Allstate's going to do a deep dive product dump on how you can differentiate between their indemnity plans versus their access plans, which one we're going to complement or which one we're going to replace with ACA coverage. But cancer stroke plan really worked out in this example. And the commissions, again, we're looking, if this was an ACA client of yours previously that was no longer able to afford the ACA plan due to lack of subsidies, exorbitant costs based off of age, etc., this is going to help supplement that lost income on the ACA commissions that you were receiving. And commissions are great. If we're talking about premiums, health access plan, they have a guaranteed issue product. I think with this example, I used a health access plus plan. So we're still talking, when I ran the Pennie rates, half of what her ACA premium would have been for a $6,000 deductible plan. So great plan, great premiums, guaranteed issue opportunity. And this, through a rather unfortunate event, you were able to provide extreme value and peace of mind to your client that they're not going to have to go into medical bankruptcy, and hopefully can focus on the things like their treatment and getting back to health, which is obviously the most important. So you're providing value, you're replacing lost revenue. It's a win for everyone. I think that's all I had. Let me see who's next here. Life insurance, Steve.
Great, thanks, Thomas, and thank you everybody for being on this presentation today. We appreciate all of your business with URL, and thank you, Christy, for getting this together. This is great information and great content to kick off the new year. And in life insurance, you always start at zero every year and got to kind of restart your business. But what's nice is when you have clients and clientele who expand across all markets, there's many opportunities for you to cross-sell and provide life insurance solutions to your clients in the senior market, to families and businesses. And that's what we're going to cover here over the course of next few slides. If you have any questions, put them in the chat, and we'll be happy to handle those. So life insurance cross-selling, the main markets we're seeing within URL, obviously in the senior market, we're focusing on final expense. There's others out there for long-term care hybrid plans and other retirement solution plans that we can get into the weeds on other calls, but the highlight would be final expense. For our clients and agents in the under 65 market, term life insurance for mortgage protection and income replacement during your working years. If you don't have at least a term life policy to replace income and debt, you should be doing that, and you should be talking to that with your clients. And for those who are focusing in employee benefits and in businesses, we're going to touch on two of the three main pieces on key person and buy sell. Executive bonus would be something else we can touch on kind of at a later topic when folks who are in that market would like to learn more about executive bonus. But 42% of adult Americans, roughly 102 million, say they need life insurance. And from the 2024 Insurance Barometer study from LIMRA, you've got a over 40% chance that your clients are thinking about life insurance, want life insurance, but need someone to talk to about it. In the senior market with final expense, these are whole life policies. The rates will never increase. Coverage never cancels. Coverage never decreases. They're smaller benefit amounts, usually, obviously, for final expenses. Face amounts of $5,000, $7,000, $10,000, $15,000 are common. It's easy to qualify. These are for older individuals, and many times with the carriers, they're same-day approvals. We also have guaranteed acceptance for those who have a litany of health concerns that they cannot get a traditional final expense day one coverage. It's easy to quote. A couple ways to do it. There's apps with many of the carriers we have. There's a paper rate sheet with many carriers. So if you just have a binder that you go out with, you can have a paper rate sheet. You have URL's website where you can quote all of the different final expense carriers on our website. And of course, our life team here at URL. So if you don't want to do any of that and you just want us to quote for you and send that out to you, we're happy to do that. And final expense, primarily, we're seeing age 55 plus, but we do have clients who are as little as age 18, 25, who have some health issues that they cannot get traditional coverage. There is a growing need and cost. The cost of funerals are on the rise. The national median for 2026 is between $8,300 and almost $8,600 for traditional burial and viewing. That doesn't include all the extras, with flowers and other things. Cremation with viewing is roughly $60,000 to $80,000 currently, and many times you'll see funeral costs range from $15,000 to $20,000. And more so than ever, which is an alarming statistic, Americans are taking on debt for final expenses. So just last year, 37% of Americans took on debt for final expenses and funerals, which if you look at that, that's up from 14% just a year prior. So that tells me that our clients, if you're in the senior market, are not planning properly for their funeral expenses. It's very affordable to get some type of policy in place for them. So when you look at a rise from 14% of debt just in 2024 to last year in 2025 up to 37%, there's a great opportunity to have that conversation with your clients. So the benefits are, obviously it's going to provide peace of mind knowing their loved ones are not going to be burdened with the funeral expenses, additional expenses with medical bills, legal fees, taxes, other debts. Allows families to focus on grieving and healing rather than money during those times. The application, again, is simple. There's no medical exam. Most health issues are accepted. Underwriting decisions are made in minutes. And again, we have guaranteed acceptance plans available. Premium and compensation. So looking at a husband and wife age 65 and 70 at $10,000 of coverage. So at $10,000 of coverage for a male age 65, it's just under $54 a month. And for a female, just under $41 a month. So that family would be spending roughly $95 a month. They would each have $10,000 of coverage. That cannot be canceled. Premiums will not go up. Coverage will not go down. And the average commission when we look at a level death benefit like this is 110% first year plus renewals. So helping out one of your Medicare clients with final expense, in this case, who just turned 65, want to also add some final expense, that's another $1,250 of revenue to your agency for this year. Now, if they've been with you a few years, they're age 70 and they want $10,000. Obviously, the older you get, the price goes up. So you're at $69 and change on a male, $52 and change on a female. And that total couple would be $1,619 and commissionable first year premium for your agency. If that is unaffordable for some of your clients, you can back that down to a $7,000 benefit, a $5,000 benefit, and in some cases even less. So you can find a price that is affordable for your clients. Now, another thing we'll run into is some pretty healthy 70-year-olds, 75-year-olds who have an old policy that may have some cash value in that. And in those cases, we'll look at 1035 exchanging that cash value into a new policy. It could be a single premium plan with no premiums, or it could be a larger policy, a $25,000 policy with universal life, a little bit more underwriting, but a lower cost of insurance. So these are all things that we can help you with when you have those opportunities and those opportunities arise. Icebreakers for final expense. Those of you in the senior market who are not actively promoting final expense and life insurance, here are 3 simple ways to break the ice with your clients. While we've secured your healthcare for 2026, many of my clients also worry about the rising cost of funeral services. Have you put a plan in place for that yet? Because Medicare rules require us to keep these topics separate, I'd like to schedule 20 minutes on whatever day and time to show you how you can protect your family from those specific expenses. Does that work for you? Did you know 37% of Americans took on debt for funeral services in 2025? Have you planned to take care of final expenses so they won't burden your family? 3 simple ways. Take these, use these, make these your own, but certainly start having that conversation with your clients. Term life insurance, great solution for, I would say, our under senior clients, but we still have 65-year-olds buying 20-year term. They still may have a mortgage on their home or a second home that they need to cover, but we primarily we're seeing term life insurance at the younger ages for income replacement. Term life insurance, we now have policies that go beyond 30 years to 35 and 40 years for younger individuals. Many of our carriers now have accelerated underwriting with a quick issue without a need of paramed up to $2 million or more. We are seeing these policies go in to the system and out many times in the same day or the next day. We have return of premium plans on a 20, 25, and 30 year. Some of our plans have living benefits for chronic and critical illness, which would cover critical illnesses like cancer, heart attack, and stroke, and some other things that would pay out a portion of the death benefit if your clients had one of those triggers and events. All of the term plans we offer are convertible to permanent insurance. It's low cost coverage, and we offer very easy drop ticket e-apps that can be completed by you with your client in 5 minutes or less. And with a company or two, we even have a direct to consumer tool that your clients, you can send it to them, they can quote it and do an application on themselves. I recommend being part of that conversation, but it is available for those who have that type of opportunity. The main reason for term, we're looking at income replacement or paycheck protection is another way to say it. So if you're driving to work every day and you don't make it home, your paycheck will make it home as you when you pass away. So if you're trying to protect $5,000 a monthly income, a $60,000 net income for 10 years, that's just a little over $500,000 of life insurance need. And if you're doing it for 20 years, that's just under $1 million. So if we look at a female age 40 who's in fairly good health, you can see at $500,750 to $1 million of coverage on, if you're protecting just for 10 years, you're talking $1 a day or less, under $20 a month, $27 a month at $750, and $30 a month at $1 million of coverage. For 20 years, you're looking at $51 a month on $1 million to $29 and change on $500,000. Very affordable. The companies are now making it easier than ever to apply for these coverages and for your clients to get it in a hassle-free way. Mortgage protection, kind of same concept. You have clients, 35-year-old couple who just bought a home. They have a $300,000 mortgage. You want to protect it for 30 years. Again, $27 and $23 a month for traditional 30-year term. They want to add on a return of premium rider where they get all their money back at the end of 30 years. You're looking at $70 and $58 a month. And then you can see at the end of 30 years, they're getting $23,000 and $18,000 and change back. So mortgage protection, these are these things when you're talking to your clients and you hear that they have children, they have a new driver at home, they have a new mortgage. These are triggers to talk about life insurance protection. For those in the employee benefits space and who are working with businesses, buy-sell life insurance to protect the buy-sell agreement is extremely popular. And generally speaking, year in, year out at URL, our highest premium life insurance sales by agents are in the buy-sell in the business markets. So if you're not talking to your clients in regards to business life insurance, please do so. So here's an example. I don't know if I have any deadheads out there, but if I do, put in the chat your favorite song. We just lost Bob Weir last week. Very, very sad day for those who love music and iconic bands. So here we are. We've got Bob and Jerry's Guitar World. Small business. Bob's age 40. He owns 50% of the company. Jerry's age 45. He owns the other 50% of the company. And the company's valuation is $1 million, keeping it very simple. You've helped them with their group benefits, employee benefits, and putting some things into place. Now we need to help Bob and Jerry on their business. So Bob buys a life insurance policy on Jerry for $500,000, and Bob is the owner and beneficiary of that policy. Jerry buys a life insurance policy on Bob for the same amount for the valuation of the company, and he's the owner and beneficiary of his partner's plan. So with that, let me kind of stick back on this. The idea is, if either one of them pass away, they don't want to be in business with the other one's family. That could be their spouse, their children, whatever. So what's going to happen is, if Jerry passes away, Bob's going to get $500,000 of life insurance. He's going to then give that to the surviving family of Jerry, so Bob can take over the business and not have to be in business with the family of his business partner. He is in business with Jerry, not Jerry's wife or not Jerry's children. So we have that. The family's happy because they get compensated for the business, and the other owner, Bob, is happy because he retains control of the business and doesn't have to be in business with family members who really don't know their business. So term, the reason why we're offering it is higher conversion rates. You're looking at revenue impact. Cross-selling initiatives can overall increase revenue by 20% to 30%. And most of these 20-year term plans are paying a minimum of 90% commission. So when you're doing a 20-year term, 30-year term, you're looking around 90% compensation. On the 10-year, you're looking in the neighborhood of 70 to 80, and the 15 years, depending on the carrier, usually between 80 and 85. There is an awareness gap. Roughly 1 in 3 people who buy life insurance from a different carrier do so because they weren't aware their current agent offered it. And you're going to be helping your clients and families. So how to ask for life insurance. You have the breadwinner pivot during a health review. Ask if your current health plan covers you, and if you get sick, your current health plan covers you if you get sick, but who would cover the family's daily expenses if you weren't here to provide that income? So again, that's your income protection conversation. Life event triggers. If a health client mentions a new baby, a marriage, a home purchase during an update or review you're doing with them, that's a flag to say we can help you with a comprehensive protection review. And there you can talk about mortgage protection, income replacement, life insurance needs. And always, I like to use an educational tone versus a sales tone when talking to clients about life insurance. Use phrases like most people in your shoes, or I want to make sure you're protected, not just covered for doctor visits, to build trust with your clients. So looking at the buy sell, again, kind of going back to Bob and Jerry, you've got 20-year terms here, and you've got, Bob, who's in good shape. You've got Jerry, who is a little overweight, type 2 diabetic. They both use occasional marijuana, not a problem with life insurance. Bob can get a preferred non-nicotine rate at about $35 if they're covering for 20 years. And Jerry, with his health concerns, is going to be around $105, $106 a month with his health concerns. The other area on the business life insurance that we look at is for key person. So we're going to stick with this guitar store, Bob and Jerry's Guitar World. They have Phil, who's their top salesperson at the store. He accounts for 50% or more of the store sales. He has all the relationships and has played with the local bands. His relationship with the guitar company sales reps, and he's making roughly $100,000 a year in salary and bonus. So Phil's the guy really driving the sales at Guitar World. Bob and Jerry want to purchase a key person policy on Phil. The company gets Phil's consent during the application process that they're purchasing a policy on him. The company applies for the coverage, and the company is the owner and the beneficiary of the policy. So if Phil passes away, the company would get a benefit of $250,000, $500,000, million, whatever they put on Phil's life. Generally speaking, on key person, if the key person's under 60, 10x annual salary is within the financial underwriting guidelines. So anywhere at 100,000, $1 million and below is pretty much rubber stamped through the underwriting process. So again, he's 45, $250,000. You're looking at $30 a month at the business as a business expense to, if something happened to Phil, business gets $250,000. They're certainly going to have a period of time where revenue is going to dip without him being there. Their top salesperson, they're going to have to rehire. They're going to have to do so fairly quickly and find somebody good. And to do that, it may take a little money to incentivize another top salesperson in that field to move over to them with a signing bonus and some other incentives. So the death benefit will provide the company the resources to do that and to weather the storm financially until they can ramp back up. So key person life insurance is something that business owners should be thinking about if they're not. And for those of you in that market, it's a great conversation to have with them. So how to ask for the business life insurance. We've updated your health plan based on your current employee count. Have you reviewed your buy-sell agreement, and is it fully funded? Many times, just that simple question, have you reviewed your buy-sell agreement and is it fully funded? Most business owners, only roughly about half have a formal plan in place, and many times it is not funded at all or fully funded. If something happens to your partner tomorrow, are you prepared to run the business with their spouse or heirs as your new co-owner? And only about 35% of business agreements are actually funded with life insurance. So actually not even half, 35% of buy-sell agreements are funded with life insurance. If you have to buy out your partner's share today, would that cash come out of your operational bank account, or do you have a dedicated policy to cover it? So many times to buy out a family member, it's going to be a lot of money, and companies don't want to take that out of their operational accounts, their reserves. A life insurance is a way to fund it on pennies on the dollar. So for key person, who are the 2 or 3 people in this company whose absence would immediately cause a drop in revenue or a loss in client confidence? If your top sales lead or head of operations passed away, how much would it cost the business to find and hire and train a replacement of that caliber? Easy questions to start that conversation. Okay, kind of moving on from life insurance. If anyone needs any of those things, I don't have the scripts and pieces in the handout, but we can certainly get those to you so you have some easy pieces to kind of go out there, start talking to your clients about on your senior clients, your under 65 clients, and your business clients. Accident insurance. This will help supplement health, life, and Medicare sales. We're going to give you 3 examples across the board of kind of where to use it and how to use it. So first off, what we're looking at here is 24/7 coverage. We have plans that are eligible for primary insured only, which start at age 15 days old. So we can do these for juveniles, and we'll show you an example of why. Primary insured and spouse, primary insured and children, and then a full family plan. These are guaranteed acceptance. You can issue these through age 70, and coverage will run through age 80 on these plans. We kind of have a good, better, and best benefit selection. It's low cost. It's an easy e-app, and they're approved in a day. You do have credit card payments available, but from quote to application from quote to application completion for a family plan, it should take 5 minutes or less. So it's very easy to quote and get out there and have a client apply and be approved. Who needs it? Most everybody. Accidents happen at all ages. anyone who would have a difficult time coming out of pocket for a high deductible health plan when they have an injury due to an accident. Individuals, husband, wife, families, anyone living an active lifestyle. And again, we have the juvenile policies available. 43.5 million Americans visit an ER each year for injury-related reasons. Think of like this time of year, we're in January. Most of us are probably in Pennsylvania or in the Northeast. Slipping on ice is a real thing at all ages. People getting in and out of the tub or shower, slipping, yard work, house cleaning, an auto accident, sporting activities, burns, cuts in the kitchen, and more. It was the holidays. I was doing a lot of cooking, and you have a couple cuts and burns from doing all that cooking, and those things happen. And sometimes you have a little ER visit or a little urgent care visit, and those start adding up. So cross-selling opportunities, again, in health. These plans in the employee benefit market can be employer or employee paid on a list bill up to 30 employees. So great in the small business market. Life insurance sales, great add-on. And Medicare clients, obviously, who are 70 and younger, there's space for this. This plan is offered through Assurity, and it's a 71% first-year compensation to an agency, 5.5% renewals 2 through 10, and 2% years 11 on. As you can see, we have rates for individual, primary spouse, primary insured kids, and family plan. So, for the main pocket 18 to 50 on a family plan, you're looking at you're looking at $25, $34 to $53 on a family plan. And on a individual rate, $8, $11 to $18 a month. Couple sales ideas. First one is for the juvenile. We have the high school sports star, Johnny. He's a football player. He's playing in a high school football game, and he breaks his leg. So he took an ambulance to the ER, examined by a doctor, X-ray for his leg. He's admitted to 1 day in the hospital, given a prescription scooter, seen by a doctor for 2 follow-up visits, and 6 physical therapy appointments. So mom and dad purchased kind of the best plan for him, which was just under $14 a month. Compensation was around $119 first year plus the renewals. So what gets paid to mom and dad for this accident? $400 for the ambulance, $200 for initial treatment, $60 for an X-ray, $3,300 for a fracture of a lower leg, $2,000 for a hospital admission, $400 for confinement, $2,000 for inpatient surgery and anesthesia, $100 for the appliance, the scooter rental, $200 for 2 follow-up treatments, $360 for rehab therapy 6 times, and they pay an extra $1,000 for an organized sports injury. So the total benefit paid out to the family directly was $10,020 to help supplement those additional costs. And when we look at the organized sports injury, that's not just not for kids. That's for adults too who are doing organized sports. That could be a softball league, that they play in through their work. That could be tennis, pickleball, any kind of sports league at any age that pays an additional benefit. Clumsy dad. Bill's age 35, married, 2 kids. He's doing yard work, trips over a hose, lands on his shoulder. He drives to urgent care, examined by a doctor, X-ray, MRI, operated with anesthesia, kept under observation, diagnosed with a dislocated shoulder, seen by a doctor, steroid shot, and 6 physical therapy sessions. Kind of adding up all of those benefits, that's $1,655 paid out to the family. And they chose the middle tier plan at $35 a month. And for the agent, that's just under $300 in first year compensation for just tacking that on to maybe a health sale. So again, a great benefit there for your middle pocket of clients there from ages 18 to 50. And this is for your senior, maybe in your Medicare or pre-Medicare age group. Here we have Judy with a pickleball injury. She's age 67. She falls while playing in an amateur pickleball competition, and she fractures her wrist. Again, she goes to the ER, examined by a doctor, x-ray, diagnosed with the wrist fracture, seen by a doctor for a follow-up visit and 6 physical therapy appointments. She chose the $37.83 monthly premium for the best coverage. To the agent, that's an additional $332 in compensation. What Judy receives is a total of $2,212.50 in benefits for the initial treatment, x-ray, fracture of the wrist, follow-up treatments, rehab, and again, an organized sports injury. So the accident coverage is there for each of these different markets. For your young, I have 3 teenagers, and my son just turned 18 and is at college. I wish I would have had this plan when he was playing high school sports. He was a high school golfer for 4 years and a high school lacrosse player for 4 years. And I could have used this plan a couple times for him, but his biggest injury was a shoulder injury, which did not truly happen on a lacrosse field, but at a golf tournament in high school, where he needed surgery and rehab and all of that. So a family plan would have more than covered the cost of a couple years of premiums, or a juvenile plan could have been anywhere from $6 to $13 a month. So again, some icebreakers. If you or your spouse had an accidental injury today, do you have a couple $1,000s set aside specifically for medical deductibles and copays? Plans start at, you look at the rate sheet, plans start at X monthly for husband and wife and blank monthly for a family plan. Does your current coverage provide a cash benefit if you're hospitalized due to an accident? And would it be helpful for you to have a plan that pays you directly if your kids get injured during the sports season? Plans start at $6.76 a month. So depending on what your market is, easy icebreaker for accident insurance. There's an agency that is primarily under 65 individual health in Florida that has currently in November and December put in a total of 3,000 applications for this plan, and the revenue to their agency was an additional $600,000. So they're adding it on to every sale. They're talking about this every time. This is a no-brainer, easy add-on, and it takes an extra, on average, 3 to 5 minutes for an agent to add this on and do an application. And these policies are issued within 24 hours, guaranteed acceptance.
Thanks, Steve. That was awesome. Before I get to my slide, I did want to piggyback off of Steve's accident plan. I'm personally very excited for this product and this carrier to be able to market this to our agents. I felt like Steve may have been picking on me a little bit with that clumsy dad example, but I also have 2 young children who are starting to get involved in sports. And if we're comparing this accident plan to a group accident plan, if for any of those agents on the call selling employee benefits, hopefully you're already cross-selling, maybe you're selling some work site benefits. The accident plans, first of all, hopefully you caught on Steve's slide, this accident plan can be list billed. So you can offer this on a group chassis if you're in the employee benefit market. But if we're comparing product from a typical group accident plan to this Assurity accident plan Steve's been talking about on the past few slides, the compensation is more than triple to the agent. on this Assurity plan first year versus what the worksite carriers are typically paying on an accident plan, 10 to 15% of premium, right? But the product design is bar none. There's no other product on the group chassis with our group carriers that are going to compete with this individual market. Those examples Steve gave of the payouts, I mean, there's pages of payout breakdowns on this Assurity plan, and anyone familiar with the employee benefits space, those accident plans are really somewhat basic. They help in those situations to supplement some out-of-pocket medical costs or do whatever you want with those, but it's night and day, this Assurity accident product versus a lot of the accident products out there on the market now. And the compensation is much better to the agent. So talking about product reference guide, we've had Steve mentioned that Florida agency that is crushing it with this accident plan, cross-selling to their ACA clients. We've seen tremendous success the past few years with agents in the ACA markets, cross-selling dental, vision, and life. If it's a young we have one agency in particular we built out a call script for. Anytime they have a client reaching out to add a newborn child to their ACA or Pennie plan, that's when they're cross-selling the life insurance policy for mortgage protection, because that family is expanding their family, and now that those parents have one more human life to account for. So dental, vision, life on the ACA Pennie side is huge. With the Medigap, dental, vision, hearing, we talked about that, and the life and annuities are fantastic. And then with the Med Advantage, the hospital indemnity and cancer plans that Christy talked about, those indemnity, the expense plan, hospital expense plans, and the cancer stroke plans, those can be applied to the ACA markets as well. Again, Christy had a slide where we identify that target audience, the people that have a family, anyone on an ACA plan that's paying astronomical premiums or have extremely high deductibles. They're going to be great opportunities to cross-sell your current client to, and then target when you're selling to a new Med Advantage or Medigap client or ACA. Thank you. I did want to highlight one more thing. The HPO section of URL's website is still currently under construction, adding the products we recommend for our ancillary. I think Christy said earlier, Medicare has built out their portion, HPO's portion of the website. We are also building out those ancillary products. Again, we're trying to make this easy for our agents to provide more value to their clients and generate new revenue or any lost revenue they've had through the challenges in the Medicare and ACA market the past couple years. But we're building out the website with those product recommendations. We're providing sales scripts. We've given you case studies. Hopefully you got a lot out of this. But that handout tab on the right-hand side of your screen is going to provide that link to our website where you can see all this and much more.
I would just like to add quickly on that last slide, it says, strike while the iron is hot. We understand during the open enrollment period for Pennie or the AEP for Medicare that it's really hard to fit in these extra conversations because you're on limited time and you need to see as many people as possible. So the beginning of the year is a good time to circle back with your clients to have these types of conversations and say, I wish I would have had time at that moment to discuss these, but I have more time now. Can we schedule an appointment to go over these other products that I offer? But during lock-in in the Medicare world, that's what we call outside of the AEP. When you're writing new business with turning 65 individuals, we want you bringing up these products at the time of the sale. So when people are in yes mode, when they're buying, is when you're going to have the biggest opportunity to have these discussions and sell more plans with one person. So strike while the iron is hot, while they're saying yes. Again, that's a Power Sales University technique that you can dive into. If you're interested, let us know. And if you have any questions, we're open for questions at this time. If not, we'll say goodbye and let you get back to your day and write some business. All right. Well, thanks, everybody. You can reach out to Thomas, Steve, or I and our teams at any time. Hope you know how to reach us. And thanks a lot for your time today.
Thanks, everyone.